Why is GBP USD dropping today on daily chart despite ceasefire headlines? Sterling just printed a higher high that nobody should trust. Cable pushed above 1.3460 earlier, and the moment price touched that level, sellers showed up with size. Right now we are sitting at 1.3426, and if you only look at the headline you think the pound is recovering. You're being trapped. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end because I'm giving you 3 exact levels you can trade tomorrow before payrolls rewrite the entire dollar story. Here is my instant market verdict for this session. Cable is not trending higher. It is fading into resistance. The 5-hour and 1-hour trends are both a strong sell, stacked below a daily chart that is also a strong sell. We have a classic bear flag breathing its last breath. The bias is fading rallies until proven otherwise, and the single invalidation level that changes everything is 1.3530. Write this number down. If we get a daily close above 1.3530, the weekly sell structure resets and this bearish call is dead. But right now the herd is positioned long, buying every dip on ceasefire optimism, and institutions are selling liquidity into those rips. That misalignment is exactly where aggressive movement is born. Let's go deep into the technicals now. From the weekly canvas right down to the 60-minute noise. On the weekly, the trend is sell. That's not a weak signal. It's an anchor. The weekly moving. Averages are sloping lower, and price is hugging the underside of the 20-week MA like a ceiling. Step down to the daily, and you get strong sell. MACD on the daily is minus 0.0003, barely negative but perfectly flat. That is not recovery. That is momentum decay waiting for a catalyst to drop again. RSI is 45.9, not oversold, not even close, meaning there's plenty of room for the next leg down. Now look at the moving averages I've mapped for you. The MA5 at 1.3438 and MA10 at 1.3442 are already turning lower, acting as the first dynamic resistance. The MA20 sits at 1.3458, right where the intraday rejection happened. But the real brick wall is the MA50 at 1.3471 and MA100 at 1.3451, clustered into a tight resistance band between 1.3450 and 1.3471. That band is the Fed ceiling. Every time sterling climbs there, sellers smack it down because that's where real yield differentials get priced. The only line defending the downside is the MA200 at 1.3387. Which aligns almost perfectly with the key support structure starting at 1.3400 and extending to 1.3373. Here's what most traders miss. The stochastic at 54.73 on the 4-hour is not in oversold territory either. It's drifting sideways while price makes lower highs. That is hidden, bearish momentum. Combine that with the fact that the 4-hour MACD histogram is printing negative divergence against the last minor bounce, and you've got a textbook exhaustion signal. Buyers are gassed. Gold is telling the same story. Real yields are repricing for a hawkish payrolls print, and sterling is moving tick for tick with that repricing. When real yields pop, the pound gets crushed under the dollar's weight. Let's connect the fundamentals now, because yesterday's price action didn't happen in a vacuum. The core news driving sterling is that Middle East ceasefire optimism gave a fleeting bid to risk, but it's already fading. The real driver is the upcoming US payrolls. The market is pricing a strong number, and that keeps a hard Fed ceiling on pound sterling to US dollar. The Bank of England is done hiking, UK data is softening, and the 2-year yield spread between gilts and treasuries is widening in the dollar's favor. That's the dollar killer dynamic in full effect. Until that spread stops widening, any rally in cable is a short opportunity, not a trend change. My 1 to 2 week directional lean is bearish, targeting the 1.3373 support first, then the 1.3335 liquidity pool. The event that kills this lean is a payrolls miss big enough to push the DXY below 103.50, or a daily close above 1.3530. I'll say it again, that's the invalidation. Now I want to hear from you. Do you think the dollar index breaks 105 this week? Comment yes or no right now. I'm tracking consensus live. Most people skip this next section, and that's exactly where the money is made. Keep watching because I'm about to give you 3 exact trade plans with stop losses, targets, and invalidation notes that you can screenshot and execute. No fluff, just levels, the sniper, our conservative plan. The setup exploits the resistance band near the Fed ceiling. We want to sell a rally that fails to reclaim the MA20 and MA50 cluster. The exact trigger: place a sell limit at 1.3460. Wait for a 1-hour candle to close below 1.3455 to confirm the rejection. If you don't get the close, don't chase. The stop loss goes at 1.3505, above the next pivot resistance at 1.3503 and well above the noise. This gives you a 45 pip risk. Take profit 1 is 1.3405, just above the psychological 1.3400 magnet where buyers first appear. Take profit 2 is 1.3378, right inside the second support shelf at 1.3373. That gives you a risk reward of roughly 1 to 2.7 if both targets are captured. The whole setup is void if we get a 1-hour close above 1.3510, meaning the resistance band is broken and the bearish structure cracks the sniper, conservative, entry. 1.3460 limit, 1H close below 1.3455, stop loss. 1.3505 take profit 1. 1.3405 take profit 2. 1.3378 risk, reward. 1:2.7 are invalidation. Void if 1H close above 1.3510. The active trader, our standard play, is designed for the breakdown. A lot of traders will try to buy 1.3400. We want to be on the other side when that level fails. The entry is a sell stop at 1.3395. Wait for a 15-minute candle to close below 1.3400 to trigger the break. Don't front run it. Let weak hands sell their stops. The stop loss goes at 1.3430, just above the 5-period moving average that will act as resistance on a retest. That is 35 pips of risk. First target is 1.3370. Capturing the quick flush into the 1.3373 support. Second target is 1.3335, the deeper liquidity pool. Once take profit 1 is hit, move your stop to entry to create a risk-free runner. The risk reward on this is 1 to 2.4. Invalidation: if price reclaims 1.3420 and holds for 30 minutes before your entry triggers, pull the order. We do not chase breakdowns that reverse. Type your pound sterling to US dollar range for tomorrow in the comments now. Let's see who's aligned with the break to the active trader, standard, entry. 1.3395 sell stop, 15M close below 1.3400, stop loss. 1.3430 take profit 1. 1.3370 take profit 2. 1.3335 trailing rule. Move stop to break even after TP1 hit risk or reward. 1:2.4 are invalidation. Void if price reclaims 1.3420 pre-trigger. Now the aggressor, our high-risk counter-trend play. This is only for those who can lose small and manage risk aggressively. If we flush into the 1.3373 monthly demand zone and you see a pin bar or a bullish divergence on the 5-minute, you can take a bounce long. The entry is a buy limit at 1.3375. Place it before the liquidity grab. Stop loss is tight at 1.3345, below the next structural low and the 1.3335 pivot. You're risking 30 pips. Target 1 is 1.3425, right back into the old range. Target 2 is 1.3455, just under the resistance band. That's a 1 to 3.3 risk reward. But remember, this is against the daily trend and the payroll risk. If a 1-hour candle closes below 1.3355, you're wrong, get out. No exceptions. The aggressor, high risk, entry, 1.3375 limit buy stop loss, 1.3345 take profit 1, 1.3425 take profit 2, 1.3455 risk, reward, 1:3.3 are invalidation, void if 1H close below 1.3355 warning. Counter trend against daily strong SLL risk management pulse now, 30 seconds. Never risk more than 1 to 2% per trade. No positions through high impact news. And tomorrow's payrolls is the definition of high impact. Stops are non-negotiable. This is how you survive to trade the next big move. Survive first, profit later. Let's lock this in. The single most critical level for the next session is 1.3400. If it holds, we chop. If it breaks with volume, cable accelerates into freefall toward 1.3335. That is the line. Tomorrow morning, I'll be breaking down Bitcoin's wild divergence from the S&P and the gold reaction to payrolls immediately after the release. That video goes live the moment the data drops. Tap the end screen to queue it up. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one before the move happens.